In business today, three things to know. First, President Obama announces more sanctions on Russia, Russian officials, and banks. Sanctions, some say, target Russian cronies, but he cautioned there could be an impact on the global economy. Then, bank stress test. The U.S. puts more banks through the ringer to find out if they are strong enough to survive another crisis. And $80 million for 2 months' work. The eye-catching golden parachute that the CEO of Time Warner Cable will get when it merges with Comcast. Executives get millions, but what about shareholders, employees, and customers? What are they getting in return? AriseXchange starts now. Hello, everyone. I'm Andrew Schmertz. President Obama hit Russia, Russians, and a bank with a new round of sanctions Thursday, and Russia hit back. Mr. Obama named 20 Russians on the list, including a number of oligarchs close to President Vladimir Putin. Others are government leaders and bankers. Here's the president today.
We're imposing sanctions on more senior officials of the Russian government. In addition, we are today sanctioning a number of other individuals with substantial resources and influence who provide material support to the Russian leadership.
Well, that resulted in a tit-for-tat with Russia naming its own list of Americans it's sanctioning. On that list, the Speaker of the House and the Senate Majority Leader, along with other lawmakers and administration officials. Late today, Standard & Poor's, the U.S.-based ratings service, downgraded Russia to a negative outlook, concerned over the economic fallout of these actions. If you wonder where Russia gets its money from, well, look to the West. This graph shows you that French banks lend Russian businesses the most, followed by the United States, Italian, and German banks. So as the next step to cut off that money. In a few moments, we'll go to our senior White House correspondent, Colin Campbell, a little bit later, who will have all of those details. Turning now to the markets. U.S. equities rebounded from Wednesday's sell-off following some upbeat economic indicators. Weekly jobless claims rose less than expected, up 5,000 to 320,000 if we have that graph. That's better than forecasted, the forecasted 325,000. Home sales fell, but they fell less than expected. Home sales down 0.4% in February to 4.6 million. Other leading indicators in manufacturing and the manufacturing gauge from Philadelphia Fed came in positive. All of this helped the markets, brushing off concerns that the Federal Reserve may raise interest rates later this year. So now, let's take a look at some of those numbers. The Dow Jones Industrial Average closing up 108.88 to 16,331. The S&P 500 up 11 to 1872. The NASDAQ also up to 43.19. Some of the stocks we're watching today. Starbucks and Oprah Winfrey teaming up to create a new line of teas, Teavana Oprah Chai. Teas will be available starting April 29th. And the coffee chain also announcing that it's expanding its evening alcohol and light bites menu across the nation. Coffee in the morning, some Oprah tea in the afternoon, a couple shots of liquor when you get off work. All good at Starbucks. Up $1.06 to $76.97. Conagra Foods reporting its third quarter earnings, beating analyst expectations with revenues of $4.39 billion. That's 14.5% higher than last year. Conagra closing up 40 cents to $29.99. And Tesla back in the news. It will be allowed to sell cars in Arizona without establishing a dealer network under a bill approved by a state Senate committee today. Tesla closing down $1.44. The stock has been sliding recently to $234. Commodities, gold down and oil down as well. Some are calling it the March Madness for banks. The annual results of the banking stress test comes out today. It's done by the U.S. Federal Reserve to see how banks hold up under hypothetical economic crises, designed to make sure they can withstand them. The banks get a pass-fail grade and are required to reevaluate their cash reserves. Kathy Boyle from Chapin Hill Advisors is here to talk about the banks, some interest rates, and other economic news. Kathy, welcome back to AriseXchange. Glad you're here.
Great to be here.
Okay, let me ask you about bank stress tests. First, walk us through what a bank stress test is.
Well, basically what they're looking for is they don't want another Lehman a la meltdown, okay? So they're trying to determine how much risk each of these banks have. So they have a qualitative, which is sort of soft and risk-oriented, and then they have a quantitative, basically what kind of capital reserves, how much do you have out to what kinds of places. The problem is that many of these banks are very complicated in terms of their internal structure,
Sure.
and it's very difficult with what the Fed is doing to actually really get to the nitty-gritty and find out how much risk they have.
It's not a simple multiple choice test, is it?
It's
There's
not.
too many different variables. How are the banks feeling about this? Part of this is the Dodd-Frank bill. This is the third year that they have been doing it. In general, how do the banks like it? What do they want to see changed?
You know, for this, what this done, all this regulation actually really hasn't done a lot to increase the safety and security.
It has done a lot, or
it
has
has
not?
It has not. But what it has done is made an entire industry of chief compliance officers,
That's right.
compliance people, and lots of legals. So the banks basically add on costs. And this ultimately hurts consumers because the bank passes on that cost in some way, shape, or form.
Doesn't it also mean that the banks, in some cases, have to keep higher cash reserves, which means they have less money to sometimes lend?
Yes, and so they're all skittish, and because the Fed was so secretive in the beginning about what their actual metrics were going to be,
right.
So that nobody could kind of beat the system, then it's still a little bit in the dark and still a little bit, you're dealing with regulators. And so, it's just not that flexible. It's not that transparent.
Generally speaking, how are the banks doing on the stress test? If we were to hit another financial crisis, are they better prepared?
Well, according to this, 29 out of 30 have passed, so we're good. But are we really good? There's counterparty risk. There's lots of derivatives still. There's lots of different types of back and forth between hedge funds, banks, different types of lending that you really can't easily get to the bottom of.
It's difficult to prevent a systematic meltdown again, which is what they're trying to do.
Absolutely.
Let me turn to Janet Yellen yesterday. We went into this saying we're not going to hear any surprises, and then we heard a couple surprises, namely that they're eliminating their target on unemployment when it comes to interest rates.
Right.
The markets reacted poorly. The European markets reacted more poorly. What is the risk of higher interest rates in the next 6 months?
Well, I don't know about the next 6 months. I do think rates are going to start to creep up, okay? And that can happen. It happened yesterday, obviously, a little pop-up all the way. But I think that the Fed is still worried about the overall economy.
Right.
So they're not going to go too quickly. And they backed away from that 6.5% because we're at 6.7 according to the numbers that have been coming in. But nobody really believes those numbers again. So that's why they want to eliminate that.
And we've been talking about that because there's a lot of people dropping out of the labor market, so they're kind of taking away that number as a keystone for them.
Right. We have a very small percentage, historical small percentage of the overall working ability to work. 63% of Americans who can work are working.
And it's important to note that higher interest rates go with a better economy. It's not like they're trying to punish us.
Right.
They're trying to manage inflation and our expectations.
And deflation is what they're most afraid of. And so if you look at the CPI in the last couple of days when that was reported, of course, it's a little bit of a joke because it's everything but food and energy.
Yeah,
right?
I never quite understood that.
And
because both of those have gone up.
A lot.
Substantially.
And those are what most people really base their entire food budget and heating budget, right, and gas budget for the car. So, but there's deflation underneath that. So that's what the Fed is looking at partially. So, that's why they've kept a very low rate because they want to maintain, they're afraid of deflation. That's their biggest fear.
Finally, some say the Fed cannot go below $40 billion on the stimulus plan right now because the economy won't support it. Where do you fall into that?
I think that's absolutely true. I mean, the market has gone up 90% correlation with the Fed moves. So the liquidity is behind this Fed move. The market move. Fed rates are tied to the stock market. Stock market's very high. Fed pulls away the sugar. I think we could see a fall.
Okay. Kathy Boyle, thank you so much.
Thanks.
And let's turn back now to the Russian sanctions. Let's go to our Washington senior correspondent for Arise News, Colin Campbell, who is in D.C. Good afternoon, Colin. Let me ask you about these sanctions. In the past, this has come across as a little bit like sending some people to school detention. Are these sanctions a little bit tougher this time around?
Well, yes, especially now that they've expanded to 20 members of Vladimir Putin's administration, and they've included travel bans and asset freezes. Now, the president is hoping that these additional sanctions will put more pressure on the Russian government. Of course, this authorizes the Treasury to put more restrictions on energy and mining sectors, as well as other financial and engineering sectors. So this does expand things, and of course, it's already taken a toll on the Russian market. We've seen seen Novatek, which is a gas producer in Russia, fall about 5 percentage points in London, and other stocks have also taken a dip ever since President Obama has announced these sanctions. These dips, of course, if you look at their trends, they have fallen the most they have in more than a year. So they've already taken a toll. We're, of course, unsure of the long-term effect, but initially it's going to spark some type of response from Russia as well. And it already has, as we've seen from Russia announcing that they are posing retaliatory sanctions on some of our leading politicians here in Washington.
Yeah, it's basically, well, if you're not going to come to my party, I'm not going to go to your party. You mentioned the economic impact. We had a chart up earlier where U.S. banks lend a considerable amount to Russia. Obviously, that's not part of the sanctions this time around. Interestingly, one of the oligarchs mentioned here is close to Putin, and they released a statement saying they're evaluating the business impact. Is the administration basically hoping that there will be internal pressure in Russia based on these sanctions for Russia to do something?
That's right. And not only just among the politicians in Russia, but also amongst Russian citizens. If they pressure the Russian government enough, they're hoping that this will in turn try to sway or at least strongly persuade Vladimir Putin to try to change his mind as more Russian forces take over bases in Crimea. But of course, right now, it doesn't look like that is going to sway him anytime soon, Andrew.
I was going to ask you about that, Colin. What's the end game here for the administration? Because they have to play this out. He's not giving up Crimea. That's what everybody is saying. So is this now about containment?
I think it is. I mean, of course, the greater threat is that, or at least this is what politicians are saying, is that Vladimir Putin would march through Ukraine and try to take over more parts of Ukraine. And that's why you saw a kind of damage control with Vice President Joseph Biden flying over to parts of Europe and speaking from Warsaw and saying that the U.S. will help back them up in Poland, Estonia, Lithuania, and other places where they feel they may be threatened by Putin's forces marching through Crimea. But of course, many people are saying that Putin will just stop at Crimea. He does not plan to go any further, but the U.S. does not want to take that risk. So they're putting these sanctions on initially to show that they mean business, that they don't want to play around when it comes to these types of actions and this type of activity coming from the Russian government.
Okay, so Colin, now what does the administration think? Then it's hard to necessarily address this, but what does the administration think the Europeans are going to do about this? Because they are key to affecting any sanctions because it is Europe that does the most trade with Russia.
That's right. Well, so far we haven't heard a really strong response from other European countries. We have heard that the UK will stop doing military cooperation with Russia, and this could expand to any type of economic trade. But even the U.S. has an invested interest in maintaining a partnership with Russia, as it does cooperate on a lot of other issues, including threats, it does cooperate as well as threats, as well as try to quell problems with viral diseases around the world and other global threats, including terrorism. So the U.S. is, of course, wants to maintain a partnership with Russia, even though it is imposing these sanctions.
Yeah, and it's a very good point, Colin, because there's some word that they may back off on helping us with Iran. So it'll be interesting to see how this all plays out.
That's right.
As always.
Yeah.
Colin Campbell in Washington. Thank you. And coming up, how Europe is reacting to Janet Yellen's first policy moves at the Fed. You're watching AriseXchange. Because we live in a global, interconnected world, business news no longer stops when the markets close on Wall Street. And what we've discovered over the past few years of the financial crisis is that events and news that happen even in the smallest countries impact the United States and the world at large. As we bring together experts and analysts and thought leaders and CEOs and companies across many industries to not only provide the macroeconomic view, but news everyday people can use.
Arise News is a different kind of network. We are able to tell our own stories, and we're able to cover stories in a way that other media outlets don't do. We've got world-class journalists, veteran journalists who have been in this industry for decades, not just in front of the camera, but behind the scenes as well. Arise News is a place where we can tell stories in an interesting, factual, inclusive way like no one else in the business can.
news can definitely be improved when reflecting diversity.
A lot of mainstream news, they don't dive into it.
Who wants to hear about negativity all the time?
They only show what they think people want to know and not what people really should know.
World-based stories, that's what I enjoy the most.
I think diversity of news is important to the world so that everybody will be aware of their surroundings and what is happening today.
Arise News, every culture, every angle.
Time now for our business ticker. Despite the threat of rising interest rates, mortgage rates are actually falling. Today, Freddie Mac released results of its primary mortgage market survey showing the average fixed mortgage rates moving down slightly after last week's uptick. The average 30-year loan fell to 4.32% from 4.37%, and the 15-year average mortgage eased to 3.32%. However, with the Fed talking about raising interest rates, these lower rates could be short-lived. Walmart is having a spring kickoff like never before with Black Friday-like discounts. The mega retailer is slashing prices 30 to 50% on its outdoor living, lawn, and garden merchandise beginning tomorrow. The move is aimed directly at home improvement retailers Lowe's and Home Depot. Its spring savings event runs through March 29th. China's Alibaba Group is preparing for a messaging war. The Chinese e-commerce giant has invested $215 million in Tango, a startup messaging service here in the U.S. The investment would give Alibaba access to a formidable competitor in the mobile messaging market as it prepares to go public later this year in the U.S. Tango, with more than 200 million users, is one of the more popular apps used to make free video calls with texting, photo sharing, and game features. The 4-year-old Silicon Valley company is reportedly valued at more than $1 billion. The former French presidential hopeful and International Monetary Fund chief Dominique Strauss-Kahn has a new job. Strauss-Kahn, who fell from grace in 2011 amid accusations of sexual assault, accusations he was cleared on, is raising $2 billion for a new hedge fund he has created. The fund, LSK and Partners, is awaiting regulatory approval from Luxembourg, where the investment firm is based. Currently, Strauss-Kahn is in China seeking global investors. Time for the Wilson Report, named after our global business editor, Michael Wilson, who is in London. Good afternoon, Michael. We know what Janet Yellen did to the markets here in the U.S. She certainly had quite a debut for the European markets as well.
Yeah, indeed. Put the markets in a spin, especially this notion of maybe interest rates in the United States at 2.25% by 2016. That's the other thing that they were getting rather excited about. And they're thinking to themselves, well, actually, you know, is the U.S. economy recovering that well? Who knows? Unfortunately, it whacked the emerging markets because if you imagine the whole world as a sort of sea of money looking for bigger returns, when interest rates are threatened to rise, then the money tends to come out of emerging markets for a moment. People start thinking about less risk, higher interest rates and so on, and it really hurt them. And China's stocks down as well. So, you know, you've got Putin, you've got China, now you've got Mrs. Yellen. You know, it's a little bit of a bad mix, really.
It's a little trifecta, the rolling hunt of Yellen, Putin, and China.
I know.
What's going on in Europe with the banking situation, the EU agreeing to bail out more banks? Are we surprised that more banks need to be bailed out?
Well, no. What it is, Andrew, actually, it's a fund in case of bailout. It's a 55 billion euro fund. It's all part of the continuing talks on banking union. It's an idea really of fusing together the risk on banks, and if one does fail, then the money comes out of this fund. Now, you can imagine there was a lot of talk between the richer and the slightly less rich countries of Europe as to who might be contributing most to this fund and when they actually had to do that. That's really where the discussion was, and you can understand that Germany in particular wasn't very much amused by this because they're going to be the people paying the most. But
they
anyway,
have the deeper
that's
pockets
the idea.
right now.
Has to be approved by the European Parliament before it can actually happen.
We are starting to see a rise in gold after a huge sell-off last year. We've had some economists on here who say if inflation is coming back, gold is where you want to be.
Yeah, I mean, I don't know, but I saw this, and I'm seeing it. I think it was Commerzbank, which is a German bank here, saying that they reckon gold could get to $1,400 an ounce. I mean, it's what is it, $13.20 now, $13.40 now, but $1,400, and yet, you take out of that the demand from China. You think, well, where's this going to come from? And actually, it is exactly as you say, Andrew. It's the threat of inflation. It's the worries. It's the Russia. It's the Ukraine, and all the rest of it. But that's quite a considerable increase. And if you'd sort of said goodbye to gold, as I think a lot of people did at the end of 2013, well, it appears as though you might be wrong. I mean, I give you this information. I can't verify it. It's just what one bank is actually saying. But there are some quite good reasons for this. Things are very, very uncertain at the moment, aren't they? It's quite scary.
People always run to gold. Always have enough gold to run to the border. Michael Wilson in London, thank you so much. Ahead, why one executive thinks he needs a mist tunnel in his office and why he's our favorite person of the day here on AriseXchange.
Well, Arise is the only network that really covers comprehensively the African diaspora. It gives people in other parts of the world of color a chance to know about people here in the United States, us to know about them, and the world to know about us. So it's kind of an educational experience for everybody involved. Getting to know people through stories, through personal stories. You really get a chance to know what people are actually all about, what communities are about. How are we different? But more importantly, what commonalities we all share.
The great thing about Arise Entertainment 360 is that we cover the 360 of entertainment, food, fashion, lifestyle, culture. We're able to cover it all. And the thing I love most about the show is we're able to do a stunning combination of high and low. So we can talk about Rihanna on the red carpet, but we can also speak about high art with people like Sanford Biggers and Hank Willis. We actually spend quality time with our guests and we really get to know them. It's really intriguing because we get a 360 look at our guests.
I think media and reporters have a lot to answer for.
AIDS, hunger, people not having running water, the things that we just take for granted.
I think the most important issues in the world today are education and poverty.
Terrorism and war, I guess, is always. It's always an issue, and the quality of life of certain groups of people in certain areas.
I think inequality.
Arise News, every culture, every angle.
Time for our favorite person when we pick one person who grabbed our attention and not for the right reasons. Today it is the founder of MTV and the current CEO of media giant Clear Channel, Bob Pittman. While Clear Channel has been going through numerous rounds of layoffs at its radio stations and is said to be $21 billion in debt, Pittman has been redecorating his office and has put in something called a mist tunnel. What? That's right, a mist tunnel. Apparently, you walk off the elevator and sprays mist on you. If you visit Pittman in his executive suite, you walk through lightly scattered mist while listening to various Clear Channel radio stations. No word on how much the mist tunnel cost, but a Clear Channel spokesperson told the New York Post it was, quote, below the average cost for a renovation project and mist tunnel. This is not the first time a Pittman has been in the news for questionable extravagance. In the 1990s, ex-wife Sandy Pittman survived a climb on Mount Everest that was the subject of the book Into Thin Air when climbers died during the hike. Sandy Pittman was vilified for apparently bringing an espresso machine along for the climb. I guess there's no Starbucks up there. As for the mist tunnel, Clear Channel is not backing down, saying it's good for when advertisers visit, they get to walk through the mist channel. So Bob Pittman, who once demanded, "I want my MTV," is our favorite person of the day for now saying, "I want my mist tunnel." Next, the mist tunnel is nice, but how about $80 million for 60 days of work? That's even better. The stunning golden parachute Time Warner Cable executives may be getting in the merger with Comcast. You're watching AriseXchange.
Arise serves underserved communities by bringing them news, information, sports, and entertainment from places that are becoming part of the world economy, that are becoming a part of the world voice, and decisions that are affecting things in the world that people care about. They care about the economy. They care about safety and security. And if you come to Arise and you watch our broadcast, these are the things we're going to bring to you every day, 24 hours a day.
One of the great things about Arise Entertainment 360 is we have this Arise to Your Health segment, which really focuses on the holistic approach of being healthy. So we do everything from working out to juicing to getting in shape by doing fun exercises like bouncing on a trampoline or wearing these bouncy boots on our feet when we're jumping all over the set. We've done karate, we've danced the weight off, we've done just about everything. And of course, I love when we eat on set, but we do it in a very healthy and clean way.
I think that people in America do care about what happens throughout the world.
Global warming is probably something that has to be addressed sooner rather than later.
From Somalia and the genocide there, and that's something people don't know about. They have no idea the brevity of that situation.
The first thing I think about when I think of Africa is like war and famine and disease.
And right now with the tsunami that happened or the earthquakes in, Japan, we always look out for other people.
Arise News, every culture, every angle.
He's been on the job for less than 4 months, but now the CEO of Time Warner Cable, Rob Marcus, could be walking away with a severance package of $79.9 million in cash, stock, and other benefits when the proposed merger with Comcast closes. What exactly has he done for shareholders? Well, Marcus has been with the company since 2011, and this year alone, the stock price is up about 70%. Still, the number is certainly raising eyebrows among employees and customers. TV financial analyst and publisher of TradingWithCody.com, Cody Willard, joins us now with more. Cody, good afternoon, and thank you for joining us today.
Well, thanks for having me.
All right, Cody, let me ask you, what has Mr. Marcus done for his nearly $80 million?
Well, I'm not going to defend an $80 million pay package to a guy that's been on the job for 4 months, but if someone were going to, they would make the argument that he did a great job on negotiating the merger and maximizing the shareholder value that the Time Warner Cable shareholders are going to get from this merger. I mean, we're talking about a multi-billion-dollar company that's being taken over by another company, and people are going to try to brush off an $80 million payday for 60 days, I guess, because the deal's going through and going to get done for the shareholders. But my goodness, you could pay 10,000 of the Time Warner Cable customer service and customer, the guys who install the cable boxes for you. You could give 10,000 of them a $10,000 bonus.
Cody, I think on the next bill from Time Warner Cable, they list all of the different fees and taxes. There should be a little line there for, Rob Marcus severance package.
Well,
$10.
It's not just the CEO.
I know.
You take the CFO got a $27 million payout on this deal, and another 2 or 3 guys got another $20-30 million. So we're upwards of $150 million that are being awarded to executives, some of whom have been on the job for just a few months, 60 days really, and
they award.
I mean, and like I say, I think of how much customers could save each. That's they got 50 million customers.
Yeah,
that's $3 a customer.
Look, Cody, I'm all for people earning whatever they should earn. I don't think in any way the government should ever get involved like they're talking in some European countries. But this sort of encourages those who want the government to get involved to get involved.
Well, and I'm not going to argue for government getting involved in, free markets if that's truly what it is. But, again, the cable business is highly regulated, highly subsidized, and highly protected by that government.
And I want to jump in on that, Cody. These are monopolies. They are protected,
exactly.
And therefore they're basically utilities. I want to ask you one last question, or a couple questions, because we're running out of time. What kind of conflict of interest is it here when you have the people negotiating the sale of your company, and they're like, hey, by the way, we're going to get this big fat check if we're successful at it?
Well, and again, from a shareholder perspective, the idea is that in that case, the incentives are aligned together. Those executives were going to get paid for maximizing the bid that they receive for that company. But the conflict of interest isn't there as badly as just the outrageousness of it and how unfair. It speaks to that 1% thing where you've got executives making $80 million for selling a company after 60 days, and you've got guys that are working their butts off 60 hours a week at Time Warner Cable for 10 years that are making $14 an hour.
20 seconds left, Cody. Then what should companies do to manage this?
They need to be paying their employees more. They need to be doing a better job of just taking care of employees. And executives are not worth the money they're paying these people.
Indeed. Cody Willard, publisher of TradingWithCody.com. Thank you very much for your thoughts today. Some excellent points.
Thank you very much.
All right, talk to you soon. Tomorrow on AriseXchange, David Menlo, president of IPO Financial Network, joins us to talk about why initial public offerings can make or break a business. We have been seeing a substantial rise in IPOs, by the way, over the last 18 months or so. So why are all these companies now feeling like they should go public? Let's take a look at the markets for a final wrap-up. The market's rebounding from yesterday's sell-off. The Dow Jones Industrial Average up triple digits. I'm Andrew Schmertz here on AriseXchange. We'll see you tomorrow.